Welcome to This Week in Money. I'm Jim Goddard. Today, Morgan Report founder David Morgan tells us why he's optimistic about gold and silver.
Welcome to This Week in Money, the source for market opinions. Here is Jim Goddard.
My guest is David Morgan, founder of the Morgan Report, which you can find online at silver-investor.com. He's speaking to us from Spokane, Washington. Welcome to This Week in Money, David.
Thank you, Jim. Great to be with you.
Maybe explain to people what the Morgan Report's all about.
Well, the subtitle is Money, Metals, and Mining. And we take the, big picture down. The big picture is, what is money versus currency? And that's a pretty big question, actually. Most people don't really ever think about it. They assume because they've been brought up in what I call the matrix or the banking cabal paradigm, that this piece of paper that they print for basically free has value. And that paradigm has been tried over and over again. This is certainly not the first time in history that that's taken place. But most people never really think about it. They have, even, the atheists or the agnostics, so they don't have any faith. But they have faith in that piece of paper. And really, that piece of paper is nothing more than that eventually. And that's the money part. I don't want to dwell on it. But then money, metals. We look at most of the metals, really. We look at the base metals, some of the rare earths, some of the strategic, but primarily focus on the precious metals and the top four: gold, silver, platinum, palladium. But we certainly have looked at all the metals over time. In fact, we did a special report on zinc not that long ago that, believe it or not, zinc is going to be in short supply in the not too distant future. And then on the mining side, that is broader based than just silver mining companies, which of course we have several in, what we have suggested over the years, silver and gold, but over the years we've also suggested moly, lithium, copper, some of the rare earths back in the day before that sector seemed to get a little overzealous. Uranium company here and there. So we look at basically the resource spectrum, but it's important to know that we focus most of our attention on the precious metals, gold and silver.
And how could somebody get a subscription to it?
It's very easy that you can get a subscription online. It's an online business, and it's at the website silver-investor.com. There's three different levels of service. There's the basic, which is basically a buy and hold investor. Then there's your basic plus, which gets everything that the basic member gets, which is, access to the protected part of the website with all kinds of extra material besides the newsletter. And they also get the videos that we do, which entail some of the mining trips that David Smith and Chris Marchese go on. Occasionally I go on them, and then film the trip. And then there's also videos of conferences like the one we just finished here in Spokane, the Silver Summit, where we interview almost every company that was there, many of the speakers, a lot of couple of speculative type situations. And so that is with the basic plus. In addition to those videos, there's the ones that I make from time to time on an as required basis as far as how the market is doing. And those, because the market changes so much, I don't like to do them daily or weekly even. I don't want people to get in the habit of, every Friday at noon he's going to do one. I basically take the time to let the market tell me really what or when. Although I certainly listen to the subscriber base, and oftentimes they'll say, hey, it's time to do an update, or what do you think of this? And that'll prompt me to do one or another one or that type of thing. And that's where I take the charts, and it's not always just charts, but mostly it is. And I look at, the bond market, the stock market, the dollar market, the gold and euros, the silver market, platinum, maybe the ratio of silver-gold ratio. I mean, lots of things. There's no really set, it's going to be this. Although primarily we look at how the overall trends are doing in the precious metals. But we've looked at specific companies, we looked at the HUI, the XU, it goes on and on. So that is all part of the Basic Plus service, and that's the most popular service. A lot of newsletter types charge in the range of 1,000 to 5,000 for that type of service. We charge somewhere like $300, or it's even less if you pay a year in advance. And then there's one other level that I won't explain much. It's called the mastermind, and that's basically for high net worth individuals or fund managers that have a lot of money devoted to this sector, and they want our very best thinking. They want to basically be able to be with us on a conference call with some of the better known names and personalities in the market, like Eric Sprott, Mike Maloney. We're having one coming up with Foster Gamble, who produced the movie Thrive. He's got some very interesting things to say about the current situation in the monetary system, and we'll be drilling down with him. And I'm probably going to open that up to more than the mastermind people. I'm probably going to be giving a holiday gift to all the people that supported us and try to reward them for their loyalty to us, because, that's what it's all about. My belief system, I've always felt strongly that it's not what you get out of life, it's what you give to life. But obviously I need to make a living like everybody else. So this is something that we're working on right now. We think we have a confirmation from them, from the Thrive people, or Foster Gamble in particular, and we'll be able to offer that next month. So thanks for letting me drill on, but I haven't done that in a long time, explaining basically, what the Morgan Report is and the 3 different levels of service that we have. So thank you, Jim.
Well, thank you for explaining it. David, people want to know, have we seen the bottom on the precious metals market?
Hard to know just yet. Certainly you could argue that we have. Silver particularly looks like a V bottom, but it's really just too darn early to know for sure. But assuming that it is, there's a couple ways to know, and almost ahead of time, really. One is what happens around the $17 level. If we penetrate that to the upside on large volume, and it stays up above that level for like 2 or 3 days in a row, then we have a very strong probability, not a guarantee, but a strong probability, like 80, 85%, that we're going to go higher and the bottom is in. Conversely, if we get to that area, and of course it could be below that area, it's nothing magic, but that's the first level of congestion after we made this quote-unquote bottom, which we're going to determine here not too far from now. And if it gets into congestion there and it falls back down, then there's a strong probability that will test that $15 level, whatever it was, I forget the exact number, and see if it holds or not. So there's 2 ways to go. I mean, it's a tough call, because most people are so worn out. I mean, I coined the phrase, this market will scare you out or wear you out. And we're definitely in the wear you out. I mean, it's been 4 years for the silver market and 3+ in the gold market, so it's worn out a lot of people. And then after it's worn them out, some of these sharp drops that we've experienced recently have scared people as well. They scared the worn out people. So that's where we're at. I think we're probably about there, or perhaps there. We don't know yet. But I don't really think, and I'm not of the belief system, and it's not because I have some fascination with the metals and I have to be right or any of that kind of thing. It's because the market and the sentiment are so bad right now, and the duration. It's been 4 years, and I said it would be 2 or 3. It's been longer than that. So we're at a point, I think, for lots of indicators that we use. The valuation of the dollar, the valuation of the SPX, the sentiment in the gold markets, what's going on kind of behind the scenes, although the gold bugs are well aware of the Swiss referendum, et cetera, that we probably are within a cat's whisker of the bottom, or perhaps, as I say, behind us. So what's happened the last few years is that the paper paradigm that controls the price, at least at this point in time still, has moved the market down to basically the last trading day available for the metals. And that is a likely scenario. But again, we don't know. We have to just watch kind of day by day. And, the $1,200 level is critical for gold. So they're certainly looking okay, but, nothing that I'm getting real excited about. Palladium has been the leader for quite some time and set a new high. It got up to like $901, and then in the sell-off, it got crushed along with the other precious metals. Today it's up about 20, and platinum's up 22. And palladium's something to watch. It's kind of a good indicator to see, which way these metals are going. It's the leader today. So we may be there. It's just, again, I know I keep repeating myself, but it's not as easy to pick these things. I mean, I've been good. I picked, most of the tops pretty accurately. Bottoms are tougher for me. Yet, I'm pretty optimistic. What I want to state and make very, very clear is that this is not, in my strong studied view, going on another year or another 2 years or whatever. And that's contradictory to some of my peers that I respect a great deal, such as Dr. Michael Berry, who was at the Silver Summit, invited guest, and he and I have a strong personal and professional relationship. But he basically stated that, we've got a couple more years of this deflationary, deleveraging scenario, and just be prepared that, this market's going to grind sideways or lower for years longer. I totally disagree with that. I think that we are, on the cusp of starting, maybe going sideways, but sideways to higher, and that type of thing. Not sideways and down further, or just sideways for 2 years. We are going to start to climb out of this.
What's the basis for your optimism?
Well, one is being a contrarian to the contrarians. I mean, the sentiment is so low, and based on a lot of indicators that I see on the sentiment side, that's one reason. Another reason is the way silver's reacted on the chart, but that's an art, not a science. The other thing is what's going on in the physical market. I mean, what's happening with the Eagle market, the U.S. minted 1 ounce silver coins. They've been inundated with orders that can't keep up. The second thing is what is going on in the large wholesale market, and the dealers that I know pretty much on a first name basis. And they are basically behind the order curve. They have people coming in demanding bars and coins and rounds and, silver retail products, and they're taking their orders, but they're backlogged. In other words, they don't have product in their hands to put over the counter to give to these people that are buying. They're locking them in on price, but they have to wait for product. That's on the retail side, and that doesn't necessarily mean the entire silver market, but it's a pretty good indicator. One of the last that I haven't talked about in a long time, which has been a very, very good indicator, is what the bag market is doing. When the silver bag market, or what's known as junk silver, I don't like the term, but that's how it's referred, the junk bag market is at a premium. And whenever the bag market is at a premium, that's a pretty good indicator that we're going higher, and we are. So lots of things, does that make it absolute? No, it doesn't. But all the indicators that I watch certainly suggest that things are going to go up here. And that's, pretty quick.
Do you expect the inverse relationship between gold and the U.S. dollar to continue?
For a while, but I'm not of the belief, having gone through the first bull market and studied these markets for so long, that it's exactly an inverse relationship. In fact, you're starting to see gold go up as the dollar's going up. It's not always inverse. And so gold's starting to act like a currency, or really money amongst currencies. And what you can see by this, if you're, looking at it carefully, is that gold is starting to compete in the quote-unquote monetary realm, where it's the preferred money of choice versus the other currencies. So you can see a currency such as the dollar go up and gold go up at the same time. It is not always an inverse relationship. In fact, I spoke about this not that long ago. I don't know, it's been probably 6 weeks, about the extra upside down pyramid. And I saw that after I had spoken about it, that a lot of my peers also talked about it. And that's fine. It's certainly not my work. It's John Exter's work, for crying out loud. I want to give him full credit for it. But what the upside down pyramid shows is that the biggest place to see strength before the massive run to gold starts is the dollar. So it's not unexpected by me and others that the safety place to be is dollars, U.S. dollars, until faith starts to wane in those. And that's when the move starts into starts out of dollars and into gold, or what Trace Mayer refers to as the Run to Gold, which is a great website, by the way. And that is why I'm not all this worried about the dollar index going higher and higher. It's really what you would expect before you see this, run to gold. Well, gold's starting to move up while the dollar's moving up. Again, it's a subtle clue, just like platinum and palladium is a subtle clue to what's going on with the metals markets. But nonetheless, the clue's there, and it pays to pay attention, which means if you really, look at this objectively, you do get these indicators that can give you some level of confidence that you can, not only do your own work, which I do, certainly listen to others, but you don't have to follow them and see for yourself which way these markets are going to move. So probably enough said on that topic, but thanks for the question, because it's one that everybody wants to know, and it's one that even the faithful have pretty much lost faith. But I don't, again, think we have much longer to worry about it.
Are mines being closed because of low metal prices?
To my knowledge, at this point in time, I don't know of any of the mid-tier to top-tier companies that have really closed, but we're probably getting close. I know there's like projects that are put on hold, or projects that were, have a preliminary economic assessment completed, and going back a year or two, they were ready to start putting it into production and that type of thing. I mean, Huldra, which was a speculative company that we follow closely, was one that was ready to go into production, and I can't remember how many months ago it was. I'll just shoot out roughly a year ago. And in fact, we had just talked to the company, at that time, and everything was a go. And prices were soft, but not as soft as they are now. And basically they pulled the plug. They said, no, we're not going to do it. So that's one specific one that never went into production, that was slated to go into production. But at this time, again, I can't follow 4,000 companies. I don't know of anybody in the business that can. I think John Kaiser is probably the one that can follow almost all of them. But nonetheless, we follow more of the top tier and mid tier, and speculate somewhat, but that's not our forte. Our forte is making money with cash rich, unhedged, long-term type of mining situations with pretty good growth profile. Nonetheless, there's none that I can recall off the top of my head that are closing, but it's something to bear in mind, because if I am wrong and this thing is going to go for 2 more years, as Dr. Berry suggests, then obviously you are going to have a lot of gold and silver mines that will have to go on care and maintenance, because they just will not be able to make a profit. And they'll have to make a decision. It's the best decision they can make is to drone on for a few months losing money, because it's actually in the long term better to do that and lose money for a few quarters than to shut down. Because once they shut down, it's very expensive to come back up. So it's a trade-off study that has to be accomplished by the company itself, and they have to make a determination of how far, how long they're willing to go at a loss until they decide it's more beneficial to the shareholders to put on hold. But we're so close to that area right now. Again, I think that that too is one of the indicators that this can't go another couple of years. I just don't see it. But could I be wrong? Of course.
And of course, we're nearer to tax season too, where write-offs become popular.
That's why it's such a tough call going into the end of the year. Are we going to get a rally from now? No one expects it, or I should say no one, very few expect it. I try to stay open-minded and don't rule it out, but I think the probability is more that we'll get, as you suggest, tax loss selling, and probably some selling in the futures markets, and then the paper pushers will jump on top of that and force the market even lower. I mean, that's what has happened the last several years, so it's more likely to see that scenario than the other one. But again, you never know. There's so many rumors around the December delivery dates this year. I mean, I can't remember any time in the business where we've had so many commentators talking about what's going to take place at the end of the year this year. And then you've got the reality, regardless of what these commentators say, right, wrong, or indifferent. And I'm not going to comment on that because I don't know the intimate details of some of these, contracts or, over-the-counter derivatives or any of that. I know what they are, but I don't know the intimate details. But what we do know is that the Swiss referendum is coming up a weekend from this one. And that could have a very big psychological impact on the gold market, or precious metals, really. So, that is a reality. That's something we're absolutely certain about. And that's coming at the end of the year as well. So there's lots of reasons to say, boy, this is a tough one to figure out, tougher than probably some other, time frame.
Do you think silver will top $50 an ounce, and any idea when that might happen?
Well, I think it will. I mean, I'm on record putting it in black and white. It's in a printed book, the first book I wrote, that I thought we would see, $100 silver in this bull market. So obviously we've got to get back to 50 and then go above that. And I believe we will. I'm looking for, what the Elliott wave people call the fifth wave up. We've had a 1, a 2, one wave is a bull run, and then a 2 is a correction, and a 3 is a bull run, and then 4 is a correction. And then the fifth wave is the one that really, really goes. And I think we're on the cusp, again, of starting that here fairly shortly. And that's the one where you get massive public participation. And so there could be a synergistic effect where there's people that want out of the dollar because, they realize that China and Russia are the BRICS countries have set up a lot of counter dollar availability to the financial system, where they have their own clearing system, they have their own banking system, they have their own, bond system or debt system, they have their own rating system, and they're the ones that are giving good yields, whereas the Anglo-American empire has got this zero interest rate policy that they seem set on and doesn't look like they're ever going to end it. So there's competition to the dollar, not only in currencies, but in the precious metals as well. So I think that could determine things going forward, because people will start to wake up and see there's opportunity out there, which means they're going to evaluate this thing. And once they see others doing it, that could build momentum rather quickly.
Are there certain technical markers you're looking for, or have we already discussed some of them?
Yeah, pretty much. I mean, I get criticized for, picking a year-end price and being wrong. And certainly, you could take shots at me as much as you want. I'm pretty much used to it. But those things I look at as wags. I mean, wild, blank guesses. If you're really serious, you would want to see what I do on a more detailed basis, which is for, the members only. And that's where I, go move and correct. Last year, for example, I forget when, but near the end of maybe the fourth quarters, I was, asked whether I saw silver prices by the end of the year. I said 26 for a radio show like yours, Jim, and then one of my members wrote me and said, do you still see 26? I said, absolutely not. So I made one of those videos, and I showed them the reasons why there was no way it was going to go to 26. So, people that want our best thinking had, the availability of what I saw, later on, if you want to say it, and why that was inaccurate. And I didn't do it to be cute or funny or to mess with anybody. I mean, when I said 26 on a radio show, it wasn't like I was just making it up. I felt at that point in time it was pretty likely. But as time wore on, I can't go back in time and say, Jim, I'd like to make a correction to what I said a month ago. Could you put this out for everybody that's listened to my interview? That can't be done. So, but what I can do is for people that are, in the protected part of the website, because they really do want to stay in tune with this, they can tune in, which means they get, the most recent thinking and why. So I obviously made that correction, if you want to call it that, to the people that really, were the most interested, at least the ones that I feel are the most interested. And those are the people that, I have a very strong relationship with.
What was the overall mood at the Silver Summit in Spokane recently?
Well, difficult to describe. It was not solemn, but it was serious. But, there was a little bit of levity. I mean, there was some, jokes and laughter, but it was fairly solemn. I mean, it was serious. What I found interesting was that everyone there, to a man and woman, in my opinion, was very, very astute as far as why they're in this market still. And I got feedback from about I got feedback from almost all of the companies, but 3 in particular that told me basically the same thing, and it went like this. These people are the smartest people at any show I've ever done. They ask the most in-depth questions, and once that's asked, they have another equally in-depth question. And it really, is a job to go in and answer these people's questions because they're so familiar with our company and what we're doing and why we're doing it and what our next project is and on like that. So that, of course, is very gratifying for me to hear. On the company side, a few of them indicated to me, and I certainly have to, acknowledge that they, from their perspective, it makes sense. They said if it's, this slow, a year from now, we doubt we'll be back to the summit. And I can't blame them because there really was not, much foot traffic for these companies, and that's, why they come there. So, again, an indicator that, we're probably near the bottom, but not a guarantee. So it was good overall. I think everyone that came was glad that they did, including the, the companies themselves. Wasn't like the heyday, when silver was moving from, the $19 to the $48 level or anything like that. But nonetheless, it was, sparsely attended, but attended by very, very solid, in-depth, reasoned people that are dedicated to the sector because the fundamental fact for why they invested in the precious metals has not gone away, and they know that.
Just a reminder, you can get your free trial subscription for the Morgan Report at themorganreport.com. David, thanks a lot for being on This Week in Money.
Jim, it's been my pleasure. Thank you.
Always consult your investment professional before making any investment decision. This Week in Money is archived online at talkdigitalnetwork.com.